Hey, good morning, Advantage members. Happy Monday. It's February 27th. We're pretty close to the end of the month here. I think February is that short month, right? Where I think, yeah, tomorrow is the last day, and then Wednesday is the 1st of March. So, yeah, I mean, lots of exciting stuff coming up, right? Month end. I talked about on my Twitter feed, I posted this chart, this calendar of events that are coming up. 7th of March, you have some crypto related events, 8th and 9th of March, Bank of Japan, and then China CPI. And then of course, US CPI coming up in the middle of the month, FOMC coming up shortly a week after. All kinds of very interesting stuff coming up in the month of March. We basically have sort of a mid-cycle, potential area for March where markets are getting a little extended, here as we get into a rocky, March month, which has historically been kind of choppy. If you actually look at the last several March months, you can kind of see like over here, March was, up into the up into the right here in 2022, and then rolled over shortly thereafter in April. In 2021, March was pretty much all chop in this particular area right here, pop up a little bit in April, and then, significantly roll off. In 2020, I think March was somewhere, let me see where March was. Oh yeah, March, 2020, obviously we know where March was. That was the 2020 COVID crash, right? That was a pretty brutal crash. So, as we're headed into the month of March, I do want us to be paying attention to our oscillators here, our momentum indicators, the Shepherd, the RSI, and the MACD sort of being our momentum indicators, giving us some signals of sort of overexhaustion in the near term. But then again, you can make the argument that, on a weekly basis, right? In 2022, it was such a heavily oversold market. We even hit oversold territory here in June 2022. Now we're off to a pretty decent start in the coming month of March. And so we could trail a little bit higher, maybe, as other people are making that argument, and finish off sometime in mid-March or end of March with a local sort of cycle high, and then have a corrective cycle after that. Meaning, if you look at the market now, yes, it's looking a little bit choppy, a little bit exhausted here, but maybe this is just all chop before we make a little bit of a move higher, all the way to 27K, maybe as high as 31, 32K up here. And then after that, we have pretty sharp decline and a correction, maybe back sometime in April or May, back towards 24 or 23K. And then maybe we just keep grinding on the way up for the second half of the year, right? The other argument is that maybe we're coming up to a local, or per macro, we're coming to a top, right? Meaning macro is giving us a signal like, hey, this is pretty much all you're going to get. You're going to chop about for, till April or May, and then June, July, August, September, whatever, we'll keep dropping the rest of the year. That's another argument. As of right now, the only thing I'm paying attention to is level to level trades, opportunities in the market that are giving me, insights and abilities to get in and out of trades. That's really it. For example, we're still long in the BTC long, which I picked up mid-February from 24.3. Obviously, I'm a little bit underwater in that position, but I've really not given up hope, because it's not really a high leverage position or leverage really at all. It's more of like 90% spot, very little sort of leverage. Okay. And so what that gives me is the optionality of having a larger time frame view without the risk of liquidation or feeling stress or stop outs or whatever. Okay, so as of right now, that position is still running strong. Yesterday I picked up Ethereum long because I just wanted to see like a momentum play, right? I was just kind of seeing like the market grind off the lows. Okay. So what I mean by that is, I was kind of looking at Friday and Saturday. I was like, okay, this doesn't look good, but we're not really able to smash below this 1600 SR level, right? Because you could kind of see this range that I had mapped out, this being sort of a local, choppy high, this being a pretty clearly defined low, right? So we've exceeded, come back, retested. And in fact, this is much more of a local uptrend than this creating, a depreciated like downtrend, right? So point is, I felt, a little bit better when I started to take my long. I was like, okay, well, we've reclaimed this level, 1600, and we're moving up and away from it, right? So that made me feel good. So I took that trade, with the ability of, recognizing, yeah, ETH could be sort of a dominant, runner in this market. And in fact, my target really is like, first, my target is this high around 1800 or so. And then after that, if you actually map out a pivot on weekly, you can kind of see we have a weekly pivot somewhere around here, like $1,900 to $2,000, like $1,950 to $2,000 is where that new yearly pivot is. And so that's, the area that I might be aiming towards if I do get that. Okay, but for now, I'm honestly just aiming, for just some quick momentum squeeze into 1800 or something, and then just getting out of that trade. Okay, so anyway, I mapped that out like 18 and 1900 as my target profit. If I get that, I'm closing out. Like, I don't care how high the market goes. Prior to that, I had a very nice OP long trade. Honestly, like February, I have not traded a whole lot, which I'm glad because I didn't really want to. I did put on this sort of hedge position in BNB, which is because I don't know why these are not loading, but you can click on them and load them yourselves. This is like a non-levered position. I'm really not worried about this because, like, I basically have enough assets. Like, this thing will never liquidate me or squeeze me out. So I'm really not concerned about BNB. I took this trade because I believe that if in the coming few weeks or whatever, and again, I really mean like a few weeks, like I'm hoping 2 to 4 weeks max, if the market materializes and shows weakness to the downside, I really, really, really think that BNB and Binance are going to take a pretty substantial hit. And the reason I think that is because I think the regulatory pressures and the fears that are being created for Binance are for a reason. They may not be a justified reason, and they may not be based on full truth, but they may be partial truth, or, big players or governments attacking Binance. And whatever your moral stance is on that, it doesn't matter, because no one cares about our opinion, right? What matters is if it's going to happen, Binance is probably going to be a pretty, severe target, and specifically, BNB, right? The token directly associated with Binance. You know that BUSD, if you click on this link right here, right? BUSD has been the focal point over the last few months. You could look up your headlines and stuff on this, okay? Where's a screenshot? This thing right here, right? BUSD has kind of been a focal point for regulators, okay? So point is, I believe, BNB as a token, as an asset, might be the best positioned asset for a potential short hedge position where I do see, market risks developing. BTC and Ethereum could actually squeeze up much higher. And, then, it may take a little while for them to break down, but BNB might actually not even go up all that much, if at all, and it may still break down, even if other assets go up, simply due to, like I mentioned, regulatory risks and the sort of attack from regulators on Binance or BUSD or whatever. Okay. So anyway, I put on this position just as like a hedge. Again, if I really, really feel like, okay, the market is in full bull mode and there's no need for me to be short, fine, I might take this off, but for now, I'm completely happy with it. Okay. What else? So this morning I mentioned, some assets you want to be paying attention to. OP I mentioned, right? Like OP was trading around $3 or something. And let's see, it's off to the races right now. It's at 307 already, so popped up a good 2.5% since I mentioned it. And then Blur, which I have started to accumulate, my average is like, I don't know, maybe like 97, 98 or something. So it's not great. I'm obviously a little bit underwater, but given that Blur is still one of the top NFT tokens or NFT exchange tokens in the market, I still think there's sort of a unique value add from Blur. And I think it's worth at least, buying spot. That's how I see it. Again, not investment advice. You don't have to take the trade. Again, this is never financial advice, right? Like, I'm not going to push you to buy or sell anything. I don't really care because it's ultimately your risk, your money, your call. My job is to simply show you what I'm seeing in the market from a not, financial perspective and show you what I'm doing. And what I'm doing is I have a thesis on Blur, like I had, a thesis on Fetch, last month or December, January, right? Or mostly January rather. And I traded it. Maybe I got out too early. Same thing with Solana. I bought Solana at the tippy toe bottom. Okay. But I sold way too early, around like 13 or 14 bucks. It is what it is. I mean, I still traded it a little bit on the way up, but that's just how I trade in markets that are very uncertain and very choppy, and just like you don't really know what's going on. You don't really want to start giving back your profit, right? That's just like something I hate doing. So that's why I became a little bit more cautious with my trades, securing profit wherever I feel fit. And that's how I play the market. Okay. So anyway, that's all I have. Honestly, if y'all have any questions, please do let me know. And, we can chat about it, talk about it, and then go from there. Okay. S&P 500 looking decent. Like I said, it bounced off a pretty critical level. You could see 200-day moving average coming down, tagging that level. This descending trend line that held us down, tagging that level. Now we're shooting back up. The argument here is to be made that this could be a chop mode before another high towards 4,300. That was the high that capped us in April and August in 2022. I could see that argument, or this could be a chop before another leg down. And I can tell you right now, if we break 3,900, meaning like you get consecutive daily closes under this level, I'm fairly confident we're at minimum going to 3,600 or lower lows down here, 34, 3,300. So I don't even want to think about that right now. The fact that we're having a nice, pop back up day, good, I'll take it. Same thing with crypto. Whatever happened Friday, whatever, it happened. Now we're squeezing back up. Hopefully this thing, pops up higher and we push, in a very big way. Okay. So that's it. That's all I pretty much have right now as a view on the market. Again, not financial advice. I have placed a couple of articles and things that y'all should be looking at. This one by Michael Cow. He talks about, macro inputs of dollar supremacy and, the other points regarding yield curve control and, treasuries and central banks and all that. We wrote a thread on Layer Zero. I wrote an article on Substack on Layer Zero. I hope y'all check that out. I also watched this video from Jamad just talking about, where private equity is, where VCs are, AI, all that stuff. This is another good video. So just, some good educational knowledge for you guys. And let me see here. OP we spoke about, Blur we spoke about. All right. Market was selling off into the weekend, by the way. If you, did not get into the market when it was selling off, but now you're thinking, pay attention to the stronger running assets, right? What I like to do is I like to create a chart like this where I do comparisons, and you can do comparison tool like right there. You can add whatever asset that you want, make sure it's on the same price scale. And then, you get to see like relative percentage strength or weakness of one asset versus the other. Now, right now, basically from the sell-off that we had, actually, let me go back a little bit further. So basically, this is from like midnight, let's just say, right? From midnight till now, Fracture is like the leading asset in the market. That's great, so that gives you an understanding where the market is. Now, if you want to look at the market and say, well, what is, US session? So US session opened around, 8:30 my time, right? So from this point onward, what has been bid up the most? Well, it's once again still Fracture, and then probably the one after that, SNX, and then INJ. Okay, so that's kind of how you can look at the market, from a comparative perspective. On my Twitter feed, like I said, events to be watching. McKinsey paper talking about, metaverse, and I think they also talked a little bit about AI potential impact on different industries. So really, there's a lot of really interesting stuff happening in markets. So yeah. Anyway, that's all I have. I will talk to y'all soon. If you like this content, please do hit the thumbs up, and yeah, chat soon. Okay. Good luck, everybody. Cheers.